The stock market moves at lightning speed, fueled by news. The moment a headline breaks, the market reacts instantly. Think of it like a starting gun at a race. The second it fires, everyone's off. A company reports blowout earnings, the stock rockets up. Bad news, it tanks. Money never sleeps, and neither do the people managing it. They're glued to screens waiting for the next big update. Every second, decisions are made to buy, sell, or hold, all based on news. The market is a giant brain, processing millions of bits of information, always trying to predict what's next. The rush is real. The first to react to news has the edge. If you're late, you're buying at the top, after the early birds have cashed in. The market constantly adjusts company values based on new information. This is what creates volatility, the daily ups and downs. These swings aren't random, they're the market digesting news. A positive economic report, stocks rally, global conflict. Investors run for safety. Every tick tells a story of investors reacting to the world. Your job is to read those stories and anticipate the next chapter before everyone else. In this game, speed and insight are everything. Stay sharp and you might just get ahead. Not all news shakes the market. Some headlines are earthquakes, others just tremors. The biggest movers? Company-specific news like earnings, product launches, mergers, or scandals. Economic reports are huge too. Jobs numbers, inflation data, interest rate changes. Wall Street hates higher interest rates. They make borrowing expensive and slow growth. Government actions matter. New laws, tax changes, or regulations can send entire industries soaring or crashing. Global events, wars, disasters, political shifts create uncertainty, and markets hate uncertainty. Sometimes, news hits an entire sector, not just one company. A breakthrough in AI? All tech stocks might surge. The key figure out if the news is a single company story or a tidal wave for the whole market. Knowing the difference is how you make the right move. Here's how it works. Say Rocket Ship Inc. is expected to earn $1 per share. That expectation is already in the stock price, but if they report $2 per share, investors scramble to buy and the price jumps. Sellers see demand and raise their prices. Stock climbs until buyers and sellers balance out. Bad news? Panic selling and the price collapses. It's all supply and demand. Good news means more buyers. Bad news means more sellers. Think about Apple launching a surprise hit iPhone. Investors expect bigger profits, so the stock surges. Traders obsess over news, trying to predict if it'll bring more buyers or sellers. It's not just about the headline, but whether it's better or worse than expected. Even record profits can disappoint if they're below Wall Street's hopes. The game is all about expectations versus reality. The market moves on surprises, good or bad. That's why news is everything. The market doesn't just react to official news, it runs on rumors and whispers. Sometimes, a rumor about a takeover can send a stock soaring before anything's confirmed. But if the rumor's false, the stock crashes and latecomers get burned. That's buy the rumor, sell the news. By the time news is official, the big money's already moved. Then there are true surprises, black swan events no one saw coming. A sudden drug trial failure, a shock announcement, stocks can plummet in seconds. These moments create panic or euphoria and can wipe out the unprepared. That's why pros dig for every scrap of info, trying to get an edge or protect themselves. In this battlefield of information, surprises are ambushes. You have to be ready for anything, anytime. The news waits for no one. Stay alert, or risk getting caught off guard. New to all this? Don't panic. You don't need to chase every headline. Just stay informed, not overwhelmed. Pick a few companies or industries you care about and follow them closely. Use a handful of reliable news sources, quality over quantity. Learn to separate facts from hype. Social media noise isn't news. Always ask, how does this news affect the company's future profits? Focus on fundamentals, not drama. The stock price follows the business, not the headlines. Think long-term. Ignore the daily noise. If you've done your homework, don't panic over one bad headline. Stay calm, stay informed, and keep your eyes on the horizon.